So here we have our simple partnership. There's revenues and there's profit. There's no expenses, so we have to share out all of these profits with the respective partners. Now, to keep this simple, I've just simply got a single partner, which is totally unrealistic, but this is purely to show you how the logic within the Logit system works for reporting. So we've got a balance of 100,000 and 100,000. The balance doesn't change between the 2 years. 2019 is our first year, 2020 is our second year. This is our first year here, and this is how we arrive at our $100,000 balance. We've got share of profit 100, and we've got the partner contributing the capital to kickstart the business, 50, and also taking out 50 in drawings during the year, leaving us 100,000 in balance. That 100 then becomes an opening balance, and in the second year there's the 200,000 worth of profit, and all of the profit is taken out as drawings. Notice the minus sign here. But in the actual software that in the report that we're importing into the software, you can see there's a single line item. We're keeping it super simple, and we're going to do the rest of the work inside of Logit. Just save that. Import the report. Balance sheet, profit and loss, and the classification, revenue, equity. Typically we would have two partners here, but you can see in this case we're simply reflecting the closing balance of that loan, of that account, of the partner's account. It's a closing balance. There's nothing else to say about it except that we know it's a closing balance here, and therefore we're going to have to reflect the values for capital introduced, share of profit, and drawings as manual artifacts. So before we do the import, I'll just take out the last report that I generated. We need to establish the relationship there, otherwise this won't work. And we're putting Anna Doe in as a partner. You need to put all your partners if you've got multiple partners. Now notice that she is a partner. She's not partner of. You will see that the reflection of partner of is from Anna's perspective. So partner of, right? So she's partner of the demo entity. So we come back to the demo entity. Now we can build our report, and it's a trading entity. So we use the template trading. We will have to split all this out, but let's just first come in here and put in the closing balance. So we've got our closing balance, and now we can say manually, you can see this is a manual step where we're splitting the share of the profit. Now we split out all the profit, so all of the profit is split. There's only one partner to split this to, and we need to now say what those values are. So we can see it was 200 and 200 this year, and in the previous year was 50 and 50. Drawings always goes in as minus, and we had all of the profit taken as drawings. So the drawings got taken that year, and she kick-started the business with 50. Now notice that if you don't put in all your values, you're going to have an opening balance, and in this case, this was first year, there is no opening balance. Now, if this did have an opening balance, you would have to make sure these values are reflective of whatever they need to be so that there is an opening balance. But anyway, now you can see this partnership has partners balance. Now, if there were two partners, you'd have to do this for two. If there were three partners, you'd have to do this for three. But regardless, the profit is split. And if we have a look at our balance sheet, our partner's equity is reflective and the balance sheet balances.